What's up, everyone? It's Caddy with Money Investing. So we've got another data that's coming out for inflation that we're going to be looking into today. What's going on? What's up? So we got the PPI report. That's going to be the producer price index that's actually coming out today at 8:30 a.m. Eastern, and we're also going to have some jobless claims numbers. What's going on, Brian? What's going on, Brandon? Welcome on board. Dennis, good morning, good afternoon, good evening. Michael, Ranjit, thank you so much for joining in. So we're going to be looking into that. Right now, the QQQ ETF up over 67 basis points, so kind of having that recovery from yesterday, and SPY is also over 27 basis points right now. So we're seeing a little bit of a push higher for the Nasdaq relative to the S&P 500. Yeah, so we're definitely seeing a little bit of a push higher here. I want to quickly go over two things. That's the only two things that are on the agenda today. We're going to cover the markets, but we are also going to look into two reports. The first one is the jobless claims number that come out at 8:30 a.m. Eastern today in just about 15 minutes here, about 12 minutes. And we have seasonally come down, right? So like last week, let's take a look. So if you kind of scroll down further, so last week we had 498,000. And the prior week we had 590,000, right? So this is basically insurance claims that people are making if they're not employed. So we want that number to actually come down. That's good because that would represent that more and more people are going back into the workforce. And then of course the unemployment rate is also going to come back down. Right now it's sitting at roughly 6.1%. That was a negative change of 92,000 people. And prior year, take a look at this. Prior year, we were at 2.7 million. So we had this huge spike in the amount of insurance claims that we were making. And then, of course, we are coming down a little bit of the highs, as we have found more and more people that went back into the workforce. So the estimate for today's jobless claims, the estimate is going to be 475,000. So jobless claims for the May 8th week, so that's going to be this week, are expected to come at 478,000 versus the lower than expected 498,000 that was in the May 1st, right? So again, we're coming down. That's good for the economy. The second thing we're going to go over is going to be the PPI. That's going to be the producer price index. Similar to CPI, this is also like an inflation data metric that comes out once a month, kind of like on the same week that CPI comes out. Arguably, it's a little bit less relevant when we're trying to understand where inflation stands. But again, it's still going to be a very, very important metric because this is basically what producers, manufacturers get in terms of pricing for the output that they generate, right? So this is domestic pricing for producers, manufacturers for the goods and services that they offer. This is not the consumers like you and I. This is not what we're paying, but this is what manufacturers and producers are paying for, like raw materials, could be steel, aluminum, and a lot of other raw materials, right? So what we want to see is we want to see very consistent trends. CPI report yesterday, we broke it down, was pretty higher than expected. But PPI again is going to be, if it's much higher, if it continues to tick up higher, then that potentially will get translated over to the consumers, right? So if manufacturers are paying more for their raw materials, then those costs are going to be translated over to the consumers in the form of rising prices. So again, we'll kind of take a look at this. This right here was historical numbers. So we're going to look at the final demand for PPI, which increased by about 1% on aggregate. So final demand increased 1% in the month of March, and we're going to be getting the report for April. Now, I do want to mention that the blue line, which is going to be demand of goods, is going to come off of the lows from April. So April, you'll notice April 2020 was kind of like a very negative, almost negative 3%. So once that falls out of the base effect, we're going to see a pretty sharp increase for the goods, for the demand of goods, and then demand of services is also potentially going to tick up higher. Right now we're sitting at roughly under 1%, so 0.7% for that. But nonetheless, right now the markets are pricing all that information in, so we are up 67 basis points here, and the SPY is up close to 30 basis points, and then again it comes out in about 9 minutes. We'll kind of break that down. So Palantir, let's take a look at some of those stocks. Very quickly, so Palantir is up over 1.5%. We've got Apple kind of bouncing off the lows from yesterday, up over 60 basis points. Tesla up over 1.32. We got NIO that's up over 98 basis points. Let's take a look at Alibaba. They reported their earnings down over 3%. I think they beat their revenue estimates, but I think they missed on EPS because they had about They had a fine, and I'm not sure how much it was, but I think it was like billions of dollars, a couple $1 billion that they actually paid in fines that obviously reduced their EPS. So, all right, revenue rose to 187.4 billion wons, or about $29 billion in 3 months ending in March 31st, higher than the forecasted expectations. So again, revenue jumped. Let me take a look at if there's any EPS. So this right here is going to be fiscal 2022 guidance. So quarterly revenues up 64%. We expect to generate about 930 billion RMBs for the revenue in fiscal year 2022. So they are on a different fiscal year, is what I'm assuming right now. So quarterly net loss attributable was just about 5.4 billion RMBs for the first quarter. So quarterly revenue again just shy of 29 billion here US dollars. Quarterly diluted loss was 30 cents per share, right? So 30 cents per share is what they reported. See if we can find a report that actually goes over all these things. But nonetheless, we are seeing a little bit of a pullback here for Alibaba, definitely quite a bit. Let's take a look at where XPeng is trading. I'm hoping for another morning like yesterday. Caddy saying, man, look at that. Yeah, I mean, that was, wow, XPeng's up over 6%, back up over $26. Yeah, we'll see. We'll see how the market kind of prices in that PPI data and jobless claims, right? I mean, those are not going to be some big catalysts. Those are not like huge catalysts like we saw with the CPI report yesterday. I mean, we dropped 1 percentage point as a whole for the Nasdaq, and then that still like continued to the rest of the day. And then for the SPY, we were also down a little bit over 1%. But I personally don't think that PPI is going to move the market all that much. But again, you never know, right? We could very well see us kind of maybe go flat or some more push higher. Again, jobless claims are going to be huge too for the markets. Yeah, thank you so much for joining in, you guys. I really appreciate that. Ranjit, thank you so much for reminding people for that. Again, make sure that you guys drop a like. It really helps out the channel and pushes this to other people. Yeah, let's see if we can get to at least 100 likes here. But in terms of other stuff that I want you guys to watch today, let's take a look at the calendar very quickly. So that's going to be actually, by the way, PPI final demand, the consensus estimate for the final demand year over year is going to be 5.9%, right? Prior 4.2%, we were expecting it to be 5.9. So this right here is going to be the a little bit over. Let me take a look. So final demand. And then final demand excluding food and energy year over year, we're expecting that to be 3.7, right? So 3.7% for that. And this right here is going to be the calendar that we are going to go over very quickly. So the note auctions, 30 years today. The yields did push up a little bit yesterday, so that's it's actually not too good, but it's okay. It wasn't breaking out over certain levels. I think it was up over 3% yesterday, but today we've got the 30-year note auction. So here, let me take a look. So right here, 1 p.m. Eastern, we've got the 30-year bond auction, and then today, of course, we've got all these reports, jobless claims, and the PPI data that's coming out. But tomorrow we've got business inventory, consumer sentiment, and we've got retail sales, which is going to be huge. Retail sales is important at 8:30 a.m. Eastern, and we've got the import-export prices that are also going to be coming out. All right, let's take a look. Let's take a listen on this very quickly.
The price. BTIG of Julian Emmanuel of BTIG has made the point that he thinks is staples. He likes staples for that reason. I've heard Morgan Stanley say something similar.
Do you think this will adjust equity calls out 12 months?
I think it already is.
Pull it in?
People are already talking about where the margins are, who's got the margins to tolerate the higher prices. As for the overall index level call, the sector level call's been shaped by this. The index level call, not quite yet on margins. We need to get some more calls on margins, what they think margins look like as the year progresses. Well, from New York City this morning, good morning. Your claims data up next with Tom Keene.
All right, we're just going to wait and see what the jobless claims number look like. What did you guys make of inflation, by the way? I actually shared this thing on my Instagram. By the way, you guys are more than welcome to follow and connect with me there. But my reaction to the inflation data, if you guys want to check it out, I posted on my story and how I personally feel about inflation data. I posted it on my Instagram story if you guys want to join. Again, it's going to be the same name as what I have here on YouTube. The link is also going to be down in the description below. But I basically go over how I personally feel about the inflation that's that's coming and the CPI report that we had. But I would love to hear from you guys. What did you guys make of it? Used cars, the biggest driver for the CPI going higher. Of course, it's going to raise a lot of speculation about rates. We're going to learn more about, what the Federal Reserve has to say about it. Imran, so he says, I just saw it on CNBC. Maybe fears of Alibaba delisting on NYSE is playing a role into it as well. I'm not sure because I was listening in on it. I still have to do a little bit more research on the earnings call. Still not able to find a proper source here. But I know that they were fined. There was a lot of scrutiny from the regulators in China, and that's what's causing a net loss for the company, and that's what's driving the stock lower. So, all right, let's take a look at here. Tom, thank you so much. I really appreciate that. So the inflation data was impacted by the used cars mainly. What is the weight of this data in the total? That's a great question. So by weight, do you mean like the used cars weight relative to the total CPI report, or is it just what is the influence of these prices on the total CPI? Because usually what happens is that labor statistics, like the Bureau, usually sends, I think it was like 80,000 items is what they track. And then they kind of put it in a basket, and then they kind of average those prices out to really see which are the biggest changes and the drivers for that total CPI number. So anything that's skewed over 10, 15, 20% is going to have a little bit more of an influence. Like we saw with energy prices, commodity prices, which is why when you look at core CPI, we exclude those numbers because they're not as volatile, right? So food and energy moves aggressively, like, by the month. Oil prices will spike all the May figures. Yeah, I mean, oil prices have been really going up, right? Gas prices in general. I think it was like I was reading out, like in California, it was as high as like $5 a gallon or something, which is really hard to believe. And that was pretty crazy. I mean, we could see like, and even oil prices right now, there's a lot of predictions that Brent is going to reach as high as $75 to $80. And you look at energy watch list, right now we're trading roughly at $69, $67 per share, $67 per barrel for oil. All right, so we're almost here with the report in about 30 seconds. So let me pull that up.
Working on a lot of long-term strategies. I don't have anything to share right now, but there's a whole menu of things that we're working on, processes that we're changing. So more to come later in the year of how we'll make sure we're never in this situation again.
Oh, we're seeing a little bit of a pullback here for the Nasdaq, so we're only up about 30 basis points. And
claims data in America just seconds away from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Equity futures turning higher by 0.2% on the S&P 500. 8:30 Eastern Time with your data. Here's Michael McKee.
All right, John, we are watching jobless claims. Everybody wants to see what the number is going to be there. 473,000. That's down from 498,000 the prior month.
So that's good.
That is the unrevised number the prior month. So we're continuing to see a decline in initial jobless claims, and that is what people would consider good news. Let me take a quick look here at the continuing claims numbers. The total number of people receiving benefits the week of April 24th, because continuing claims are a little bit delayed, is 16,855,000. That is higher than the April 17th number the week before, probably because people are moving off of the initial 26 weeks into the extended benefits. But it does show you there are still a lot of people who are out of the labor force, even though I mean, we have to look at those as claims, not just people, but a lot of people out of the labor force. The other number out this morning, PPI for final demand, up 0.6%. That is double the forecast. It pushes the annual rate to 6.2% for final demand. The core rate
so the estimate was just about 6%,
by 0.7 in the month, and that pushes the annual core rate to 4.1% for the PPI. Now, the PPI is not necessarily something that feeds directly into the overall numbers, but it does suggest that we do have some inflation pressures in the pipeline.
TK?
Well, I want to jump in here, Mike. I think it's important to do a history lesson here. You and I remember when the world stopped for PPI. 3 different statistics. This is 20, 30 years ago, John Farrell, where we really, really focused on PPI. Are we back to that?
We're back to looking at numbers that we hadn't looked at in a long time, but not necessarily focused on it. The thing about PPI is that, as I said, it doesn't feed directly into the CPI numbers.
But you're not fixated by intermediate PPI. It's just one example.
Well, I am in this sense. I know 2 guys who were just talking about margins, and they're concerned about margins. Well, if you look at the headline number for final demand, it was up 0.6%, as we mentioned. Intermediate demand, which is for the goods that make goods, was up 1.6%. So there is a difference between what they're paying and what they're charging, and they're absorbing that at this point. If we see the cost of final goods rise significantly, then you'll see maybe margin compression.
John, did you see how he did that?
I love that. Who are those 2 guys that were talking about margins? Who's he talking about? Guy Labat of Jenny Montgomery Scott said this yesterday. I'll repeat it. I mentioned it yesterday. I'll say it again. All
right, let's take a look at the markets here very quickly, and then we'll kind of break down that report. But very muted reactions to that. Of course, PPI arguably, like I mentioned earlier, is not as significant as a CPI report. And what they're talking about is margin expansion or contraction, because if producers are not seeing that raise in pricing, so if they're still paying less for the raw materials and they're charging a lot more to the consumers, we're going to see the margins expand for a lot of companies, for a lot of manufacturers. But if, on the other hand, we're seeing same pricing increase for the raw materials, then of course the margins are going to contract if the pricing on the consumer side doesn't increase, right? So PPI, CPI kind of go hand in hand, but CPI, of course, is much important metric that we look at. One Fastester, thank you so much for joining in. That's great. So yeah, very muted reaction. The Nasdaq is up over 65 basis points. The SPY is up over 30 basis points here, and the numbers came in a little bit higher than expected. But we're getting that lift from the jobless claims numbers, which we basically beat expectations for, 473,000 versus 475. That was the expectations, and of course a drop from 491 the prior week. All right, let's take a look at some of the other stocks too here very quickly. So Alibaba still down a little bit over 2.8%. Apple kind of muted, up over 64 basis points. We got NEO that's up over 1.25. Tesla is bouncing off the lows here, just shy of $600, 1.58%. By the way, what did you guys think of Tesla's U-turn for the crypto news and Elon Musk's tweet yesterday that we covered in our crypto update? I would love to know what you guys think, because that's really interesting, and that's kind of like talk of the day and like pretty much the week now since it was tweeted yesterday. So Mark says Wall Street just uses this inflation news crap as catalyst and justification for the continuing press FUD, and they know they are only ones profiting in a volatile market. That's true. I mean, they play both sides of the story, right? They're both, hedge funds usually have these long and short strategies, so they're playing both sides of the trade, and of course they make money on the way down, and they buy the dip and they make their money on the way up. But as retail investors, we really have to kind of understand, not to basically panic sell or be afraid of these dips and sell-offs, and instead just stick with our long-term strategy if you have one, and just keep dollar cost averaging on some of the companies that over the long term are going to do really, really well. All I need is 2 green days back to back, today and Friday. If not, then I'm That's great. That's awesome. But yeah, let me know what you guys think about Elon Musk's tweet from yesterday about cryptos. But nonetheless, Dogecoin at 41 cents. Let's take a look at some of those pre-market stocks here. See what's moving and what's not. So we got Vroom that's up over 12%, and a lot of stocks are obviously in the green today after seeing that brutal sell-off from yesterday. So ExxonMobil, Coinbase, I think reports today after hours, down about 1.36% here. Pretty sure they report after hours, right? I think Alibaba was the one that reported before the market opened. But let's take a quick look here. So, all right. So today coin earnings. So Coinbase, they're not on the list, but I'm pretty sure they report after the markets close. But then we also got Walt Disney, Airbnb, and then of course XPeng and Alibaba reported pre-earnings. XPeng's up over 6%. Li Auto's also, Alibaba's also pushing higher. But Biogenomics up over 3% here. Shift Technologies pushing higher, up over 5%. Tesla again, right on the dot at $600. Palantir pushing higher, 1.64%. Failed retest at $21 for Palantir here. Yesterday's high was right on the dot at 20, but we were not able to break out over $21. All right, Charge Points pushing higher, Enphase Energy pushing higher, Nvidia, Shopify. But it really, the real question is if these gains are going to stay on the day or if we're going to see a little bit of a rollover, like we have seen pretty much the entire week this week. AMD's up over 1.2, PayPal's up over 1.23%. Twitter's bouncing off the lows from yesterday. Let's take a look at some cryptos. So Bitcoin after yesterday now hovering around 50,000, and we got Ethereum also pulling back a lot. I really think that Ethereum's coming down to prices that are going to be very, very attractive. Coming down from 43, I think 4,300 was the all-time high for it, and I think it traded all the way as low as 3,500. But yeah, I mean, if we do see some more persistent weakness here for Ethereum, it might be the first crypto that I may get into. It would be Ethereum if you see some more pullbacks here. All right, Mara and Riot hurting. So yeah, I mean, those are two stocks that are no longer like staying aligned with the Bitcoin because they're seeing a lot of divergence away. I mean, of course, they're both down substantially after the tweet. So let's take a look at Riot. Down about 7%. We're still seeing a little bit of a recovery here for the companies. I think I woke up and saw pre-market for these two that were down like 12% each. And Mara again seeing a little bit of a push higher. The buyers kind of stepping in to push us back over, just being down about 7.7%. All right. So what stocks are we looking at today? I'll go over like a few stocks from a technical standpoint here very quickly. By the way, the SPY is retesting its 50-day simple moving average. It's literally just like kissing that moving average here at 404. So yesterday's low, $404. And on the daily chart, the 50 SMA, that's a simple moving average, sitting exactly at $404. That's not very often that we see the price, the low for the day, print exactly as a 50-day simple moving average, right? So that's pretty incredible. It goes to show that there's clear support here. And again, if you do see a breakdown below that level, we've got the 100-day simple moving average and the 200 simple moving average sitting all the way at those levels. So we'll see if that actually gets broken or if you see any type of invalidation here. And then Nasdaq here very quickly. So we're already trading below the moving averages, but 13,000 is going to be the level to watch today. All right, so let's go over some stocks very quickly. Again, very muted reactions from the data that came out. We're still pushing higher, recovering a little bit from yesterday's low. But again, I just wanted to go live for a little bit and break down these reports. I'll go over a few stocks here very quickly, and then I'll kind of come back over once the market opens back up. Yeah, I mean, I can stay with you guys till market open. Actually, you know what? Let's just run through this entire stream till market open. All right, let's go over to VIX. VIX is a good starting point. So is this my main chart? Yeah, so this is my main chart. So we're seeing a little bit of pullback here for the volatility. The high for the day, 28.9, right? So almost 29 levels. 30 was the resistance that we're watching. If you see any type of a rejection at that level, which I'm assuming we are, 30 is the resistance here. If you see a continued push down, right now it's down over 8%. That's why we're seeing the S&P push higher. But again, I don't want to rule out the volatility just yet because we're not in the clears, especially for the Nasdaq. That's going to be VXN. That's the volatility on the Nasdaq 100, and we spiked pretty aggressively for the VXN as well, right? So 32 was a resistance from our previous videos. Again, that right there is a level. If you do see any type of a persistent weakness for the Nasdaq, which I personally don't see, because now that the reports are out, we have more visibility and clarity about what the markets are going to look like, the economy in terms of inflation, and both CPI, PPI, and the unemployment numbers as well. Now, the only question is Jerome Powell, Federal Reserve, monetary policy, quantitative easing. So those are questions that we don't really have answers to just yet, but those are also we're going to get those clarity as Jerome Powell speaks more and more. Of course, recently, every time he's spoken, the markets have come down. But again, we need some clarity as to what the interest rate situation is going to look like, right? The Fed funds rate, the intra-banking rate, so to speak, is what that's going to look like. So yeah, for VXN, which is the volatility on the Nasdaq 100, keep a close eye at 40. Right now, we're getting rejected at 32. And then for the VIX, keep a close eye at this resistance at close to 30 levels. And 24 is going to be like the next support here. And again, I don't want to rule out the volatility just yet unless we are back down significantly and we're breaking out over those moving averages for the S&P and the Nasdaq. And then for the SPY, again, we're trading below the 21 EMA. That's the only cause for concern I have. So, we could go back up to retest 413, 410 today or next week. But if you do see that acting as a resistance and a breakdown below the moving average here, then it would not surprise me if you come down to 397, or even as low as like 390 levels for the SPY. Boss man, that the report was good for the jobless claims, the unemployment numbers, the PPI numbers were expected to be. They were a little bit higher than expected, but it's very aligned with the CPI report because the CPI numbers also came in much higher than expected. So it makes sense why we're seeing the producer price index also go up because of the higher than expected inflation in general, right? So yesterday, CPI, people didn't expect that to be over 4.2% for the total, came in at that level. And the same thing for PPI as well, rising over 6/8 of 10%. I think it was, let me take a look here very quickly. So, all right. So yeah, the producer price index for final demand increased 0.6%, so 0.6% in April. And then for final demand prices rose 1% in March and 0.5% in January. So again, we're seeing that tick higher month over month. And then if you were to kind of come down, let's just go back and refresh and see if you can get a PDF for this. The PDF needs to be updated because I think they're still showing this for March 2021. It should be for April. Yeah, but nonetheless, I mean, it wasn't expected because the CPI numbers were also not expected, but they came in much higher than expectations anyway. But the market, again, is giving us a very muted response because it was priced in from yesterday's CPI report, so to speak. The market's up or down today? That's a great question. I want you guys to answer. What do you guys think? The market's up or down on the day today for the Nasdaq and the S&P 500? Let me know in the live chat, up or down. What do you guys think? Are we going to roll over? Is it going to be another bull trap for the markets, or are we going to see some more persistent push higher for some of those stocks? And I also want to talk about the correlation between the Nasdaq and some of those tech stocks here, because yesterday you'll notice that a lot of the tech stocks didn't really make a new low of day or low like from yet the day before, even though the Nasdaq really sold off, right? It sold off all the way down to 13,000. So this right here, the low is much lower than on Wednesday when we traded as low as 13,100. So, all right, people saying up, up, up. I'm hoping down. The whole you guys up. Good morning, gang. Harry, welcome on board. 2 p.m. will tell the tale. Yeah, I mean, if you see any type of weakness towards the close, then yeah, I mean, there could be some more bearish sentiment. But what I want to really address here is that even though the Nasdaq continues to make low of days, like we're coming much lower every day, there's a lot of stocks, including AMD, that are not going, right? They're not going lower. So if you compare the two candles from Wednesday and Thursday, theoretically, if the Nasdaq was coming down, AMD would broken down below 74. Amazon, take a look at that, very similar candle, You know, we didn't make low of days here. Same thing happened with PayPal, I believe. So the correlation is kind of stabilizing between those tech stocks and the Nasdaq, and that's good. That's good. So what would happen is if the Nasdaq corrects over 12%, 15%, if these prices stay down there for AMD, for Amazon at those support levels, then yes, those would represent great buying opportunities, because once the Nasdaq kind of recovers, then we can see a lift off for some of those, for a lot of those tech stocks and growth stocks as well. Thinking about jumping in on Amazon and Apple today, Jason says. Yeah, I mean, they're both at really, really strong prices. Like Amazon, anything like under 3,100 is going to be great for Amazon. And then Apple, I think Apple is good. Anything under 130 right now is going to be great for Apple. So yeah, this right here is going to be the complete technical breakdown. 118 is going to be the next support, but 127, 124, anything under 130, I feel like is a strong buy in my opinion for Apple stock. Mark says, I see hashtag don't buy Tesla is trending on Twitter. Tesla has formed a bearish head and shoulders with a price projection to 400. That's interesting. Formed a... So, I mean, let's take a look. So, Mark says it's formed a bearish head and shoulders pattern. So, alright. I mean, it really depends on what the head or what the shoulder is going to be in this case. So I feel like, I guess you could point out that this may be the neckline here at close to $580. I mean, that's a 200 simple moving average. But I'm really curious to know what the shoulders and the head are going to be in this situation, because it's this right here is much higher than here, and this also is much higher than this. So I mean, a real head and shoulders pattern would kind of look like, let's pull up Palantir here really quickly. So weekly chart. By the way, let me know where you guys are from. I'm really curious to learn where you guys are from and where you are tuning in from, right? Is it in the morning? Is it at night? Is it in the afternoon? Because I love that. You know, all of us coming together at market open to really talk about the stock market and macroeconomics and finance and so on and so forth. Regardless of where we're from, really is amazing. All right, so England, we've got Latvia. Wow, that's good. Poland, afternoon from, wow, that's great. Mexico, New Zealand, Boston, that's awesome. Miami, Dubai, Belgium, that's great. Sweden, that's awesome. Florida, France, Thailand, Florida, that's great. Shout out to all of you guys. Thank you so much for joining in the morning and spending some time. So this right here is going to be a perfect head and shoulders pattern that we have for Palantir. Left shoulder, head, right shoulder. We saw a breakdown below this level. 17 is going to be the level for Palantir. Melbourne, Boston, Mass, South Africa. That's great. Memphis, Tennessee, Denmark, Colorado. There's some countries that I can't pronounce, like Lithuania. Is that how you say it? Lithuania. But anyway, so this right here is going to be the head and shoulders pattern, and for Tesla it's kind of difficult for me to really identify, you know, why that looks like this, or a head and shoulders pattern. So I don't personally see we're going to see a breakdown. I mean, it could happen if the Nasdaq corrects over 12 or 18 or 20% or whatever, but again, I personally don't see a breakdown you know, below 500, but it could happen, right? Anything can happen in the markets. And again, we were in the live voice chat in our Discord yesterday, and we were talking about this very same psychology, is that never say that it can't go lower, because it always can, right? So never say, oh, it's at $5, it's at $10, how much lower can it go? It can always go lower. All right, Dallas, Singapore, South Carolina, Montreal, that's great. Got so many people joined in from all over the world. That's awesome. So yeah, all right, so let's take a look at Lemonade here. So Lemonade is basically down a little bit over 4%. This stock has been completely on a sell-off. And this right here, you can make an argument. This was a head and shoulders pattern for Lemonade. So perfect, identifiable left shoulder, head, right shoulder. We saw a breakdown for Lemonade. Also, I think it was for I'm trying to remember. There was one more stock. So Peloton had a pretty significant head and shoulders here. So left shoulder, head, right shoulder, we saw a breakdown. Flaco, I am from India. So that's where I'm at right now. And again, I do apologize in advance when the power goes out, because historically, like, that's happened. And I've had some like abrupt endings for the live streams because the power just goes out and then it doesn't come back for like, you know, quite some time. So if that does happen, you know, I do apologize in advance. Houston, Amsterdam, that's great. That's great. That's awesome. Tesla can go down with Elon's tweet. By the way, I still want to know what you guys think about that. You know, with him basically saying that no longer accepting Bitcoin for Tesla's transactions. They're not going to be selling anymore, but they are basically ditching crypto, Bitcoin more specifically, for transactions because of environmental reasons. That was, I think, was pretty interesting. When was the last time Tesla had a gap up day? I admit it feels good. I agree. I mean, I can't even remember when Tesla was gapping up. It seemed like it was always down. So jobless claims are lower. Yes, you're right. They are lower. Yeah, trying to stay careful here and staying home pretty much the whole time. Haven't left my home in almost 99 days since I moved back from Boston. So pretty crazy. Everything that's going on here, but again, I appreciate your guys' support and prayers, and thank you so much for everything. So Valerie says Elon needs to stay quiet right now. His tweets, while viewed strategic, are also crippling. And this is something that we had talked about in our Discord live chat yesterday. And again, I do agree with you. Is that he would. I think his focus really needs to be a little bit more on Tesla, SpaceX right now. And again, that's just my opinion, that he needs to focus on growing the businesses that he's built. He's worked so hard for, like Tesla, SpaceX, instead of really worrying about, you know, Dogecoin or cryptos, like, for that matter. Those are great. They've got very, very strong futures, right? Very promising futures. But I just feel like his focus and effort and time would be better used if he was putting a little bit more into Tesla and SpaceX and so on and so forth. Because right now there is a lot of FUD around Tesla too, with the production delays and factories being halted. The China land that there was going to be purchase of, that's also getting delayed. There's just a lot of things that we need to kind of wrap our head around in order for Tesla to be a successful company. And I feel like that's getting a little bit diverted right now as a goal. So in my opinion, if it's worth investing in an S&P 500 ETF right now, like the Vanguard, I strongly believe that S&P right now, with the way that is, has some more room to the downside. So this right here is going to be the weekly chart that we covered for the SPX. So it's very clear that if you were to kind of look at this pattern, we're kind of hitting the upper band of the higher highs and higher lows. So you'll notice that this right here are going to be the higher highs for the S&P. And if I can bring this chart back, you know, this is the entire bull market, right? Since 2008, 2009 that we've seen for the S&P, coming in from like March 2009. You know, S&P was trading at 688 points. We're up over 500%. So there's no doubt that we're trading at a little bit of an overextension. Even from an RSI standpoint, you'll notice that we're trading at near overbought levels, so I would give it a little bit more room to the downside before kind of jumping in. But you can always kind of nibble in on those red days. So like 2.14% yesterday, you know, you could start a position or kind of nibble in a little bit, and then as it comes down, corrects a little bit longer, then that's going to be your cue to kind of, you know, start buying a little bit more aggressively for the S&P. But over the long term, like, this is, again, low cost index fund. With a very low expense ratio, is going to be a huge winner over the long term across a lot of stocks and a lot of fund managers in that situation. So today Nasdaq ruled because Tesla, Apple all at 200 moving averages. Yeah, I mean, there's a lot of testing points for a lot of companies, right? So we've got Tesla kind of testing its 200 simple moving average here, so that's going to be the 200 SMA in blue. I think NIO is already trading below that level, but let's take a look at Apple. Apple perfectly sitting right there. It's testing those levels. Amazon is already trading below those levels. Let's take a look at AMD. Pretty sure AMD is also trading below those levels. So the pattern's been really weak for advanced micro devices, right? Let's take a look at Nvidia. Up over 1.4%, but still, that right there is going to be the 200 SMA, the blue line we see on the chart, right? So there's not really much for us to go over on the reports. Again, kind of a muted response here, so let me actually go ahead and reload this. So this is still for the month of April. Okay, so this is for the month of April. And that's going to be for total. Alright, so we're just going to focus on total here. So 0.6%, that's an increase. So 1% increase in March, 0.6% increase in the final demand for PPI here. And if you were to look at, so goods also from March to April, we're coming down 1.7 to 0.6. So we're definitely seeing margin expansion here a little bit for a lot of those companies, manufacturers, because if prices are going higher and the producer price index for them is contracting a little bit month over month, but it's still higher over the last 12 months. So we're definitely seeing a little bit of margin expansion for a lot of companies. Let's see if we can find something else here. So again, this right here was the CPI data that was covered yesterday. So a huge spike for all items, less food and energy, and then all items also jumping to 4.2. And this right here is the actual. So month over month is what they mentioned. 0.3 was the consensus, and we jumped to 0.6%, so double the expectations. But PPI for year over year 5.90 now sitting at 6.2%. That was the consensus estimate. But coming in from 4.2% to now 6.2%. So that's a 200 basis point increase. So 2% increase for year over year final demand PPI. Excluding food and energy, the expectation was 3.1%. We're sitting at 4.1, so consensus was 3.7. So I think the market got a cue from yesterday's CPI report that it was going to come in at a much higher than expected number. And then jobless claims came in at 473,000, down about 34,000 from prior week. All right, so that's about it. So we got the 30-year note auction at 1 p.m. Eastern. Keep a close eye on that because that's going to result in the yields, which is going to be this chart. Let's go over to yields here. Let's take a look. So yields, all right, all the way down here. So 10-year yields trading at 1.686. That right there is going to be the resistance to watch at 1.758. The level that we have talked about in the past. And then the 10-year yields at 2.4. Again, very similar pattern, and for them, the resistance is going to stay put at this level at close to, I want to say, 2.4 levels. A little bit higher than that, so let's put it right there, 2.45. Jordan, is that how you say it? Jordan. I'm sorry if I mispronounced your name, but he says, what is your thought on the idea that Elon is pumping and dumping Bitcoin and Doge? I'm not really sure. I'm not sure how I feel about that because I know there's a lot of value and a lot of applications for the blockchain technology, and I need to do my research on cryptos in general. My long-term outlook is still bullish on the technology piece and the application, the usage, the utility of those cryptocurrencies, but it's just that cryptos right now are in like this growth phase. They're like very premature right now, and that's why there's a lot more upside in my opinion, but it's just how we're gonna get there is a real question. It kind of dates back to like the same analysis when the internet was started. There were a lot of companies that were, basically moving their business from physical stores over on the internet, and a lot of valuations kind of skyrocketed, and that's kind of like what we're seeing with a lot of altcoins as well. But eventually I see like over the next 20 years, there's only going to be a handful of companies, and in this case, handful of cryptocurrencies that actually dominate the space and make a majority of the market. with the application, the usage that they have. All right, let's take a listen on this very quickly.
Again today, anecdotally, I know 2 people who are doing it just starting today with their families for whatever reason. And there's a sense that this is going to be a bumpy draw out. There is, substantial inequality in how the average American was impacted versus market participants. So there's not a lot of this inflation anxiety on Capitol Hill that we see in the street on a daily basis.
I have to say, on Wall Street, Henrietta, as you know, the conversation's a whole lot noisier. Peter Cicchini, the view of the monetary policy story of the Federal Reserve, they're not changing the script. Do you think they will?
No, I don't think they'll change the script at all. I think, in fact, if anything, they will amplify the message that this is transitory because, in fact, that's sort of their job because it's an expectations game. And if the country's central bank indicates it thinks there's inflation, then there's really no shot of not having inflation. So I think the Federal Reserve's message stays the same. But I think there are really 2 other things that are going to be very important to watch. Number one, the duration and permanence of supply chain disruptions, because scarcity is one of the 2 important factors that causes inflation. And then I think, secondly, it's how much more fiscal policy stimulus do we get and how much longer do these supplementary and extended wage benefits go? Because what's happening right now, in fact, is that the federal government is setting an artificial wage floor, which is forcing companies to provide higher incentives and wage increases. We just saw it from McDonald's today. So those 2 things are what I'm looking at most closely.
And we're seeing it from Amazon right now. They're saying the average starting pay is over $17 an hour, a sign-on bonus up to $1,000. That's just crossing the Bloomberg at the moment. So it's Amazon right now saying the average starting pay of over $17 an hour and a sign-on bonus of up to $1,000. It was McDonald's about an hour ago, and it was Chipotle earlier in the week. Henrietta, the administration wanted this to happen. They wanted to mandate it, make it law. It's happening anyway. Do you think this is the market dictating things, or has the politics got something to do with this move as well?
Well, I think the plus up in unemployment insurance benefits and the salary booster that they see there is something that is transitory. It's temporary. The COVID relief bill will not be in effect forever. Those start to roll off in the summer months. So I think when lawmakers think about what they need to do next and how to proceed here, their eye is on a bipartisan bill. To your point, the Democrats were not able to get a $15 minimum wage passed in the COVID relief bill because they lost 8 Democrats. That is a sign that I think market participants also misinterpreted going into the Biden administration with Democratic control of the House and Senate, that there is somehow this progressive wing of the party that runs the show. That's not accurate, as the minimum wage fight illustrated so clearly. So right now,
so what we really discussed there is the narrative that the Federal Reserve is going to go with, right? So the biggest thing that we need to focus on is the monetary policy, right? Monetary policy is interest rates. If interest rates hike up, that's where we're going to see like a lot of basically weakness in the stock market, and of course, tech stocks are going to get a lot of weakness, and growth stocks are also going to potentially sell off as well. But right now, what we need to watch for are going to be 2 things. And again, this was according to Bloomberg. I'm just kind of re-summarizing that for you guys. The first one is a scarcity of supply, right? So if there's any persistent supply constraint issues that we've already seen because of the global chip shortages and of course a lot of other supply constraints, that's going to scarce up or dry up the supply. And if demand stays stagnant or even if it goes up, that's what's going to cause a more consistent inflation, and it's not going to be transitory. That's when the Federal Reserve may have to change their narrative or the script. And the second thing was wage employment, right? So wage increases, we're seeing the prices actually go up. So when wages increase, that's more income for the people. In other words, they'll have more money to spend. That's going to drive up demand even higher. So right now, a very simple example, McDonald's today announced that they're increasing their wage across the company, so hourly wages for over 36,500 employees by an average of 10%. So they're increasing their wage, including shifting entry-level range to the crew for at least $11 to $17 an hour. So they say in the US says that the wage increases have already begun and will be rolled over into the next several months. There was also a piece of news for Amazon. I think they're trying to hire 10,000 new workers. Let me see if I can find that piece of news. But they basically mentioned that they are trying to hire more workers, and they're also going to be raising the average pay to $17 an hour with a $1,000 signing bonus. So right now we're seeing a little bit of a mismatch between employers and employees, and that's why a lot of companies are trying to offer a lot of these lucrative and attractive employment packages to basically attract a lot of talent to the companies. So that's why we're seeing a little bit of a wage push here. But yeah, the real question is, and I want you guys to answer as well in the live chat, and we're gonna go over this together. Is this inflation gonna be transitory? Is the Federal Reserve right, or is our perception potentially of inflation actually right? Right, or is the market's perception, I should say. So is the Federal Reserve right about inflation being transitory? So we're gonna see a couple more months of the stock market bleeding because inflation runs up a little bit hotter and then it kind of stabilizes, comes back down in the fall. Or if we see inflation go past the moon, as the market is expecting right now, as we see like those demand-supply imbalances. So what do you guys think? What do you guys think? I would love to know from you guys as well.
Prices will be every day when they pay for gasoline, when they try and book a hotel, when they try and buy a car. That will be their experience of prices. And I wonder whether they start to project that out. And that expectation of higher prices leads to higher prices, and we get that virtuous cycle that we were talking about with James Sweeney of Credit Suisse just moments ago.
It would have to be sustained. That's the problem. I mean, you buy gas every day, but if you've been buying gas for your car for the last 5, 6, 7, 10 years, you know gas prices go up and gas prices go down. They have to be sustained higher. And food prices the same. Most people think food prices are always going up, even though they're not. So it's a question of what else they buy that continues to rise in price and whether they continue to read stories about prices going up. James Sweeney of Credit Suisse said it well earlier today. I'm not sure what consumer inflation expectations tell us because most people don't really know what's in the CPI and what's changing price on a regular basis.
That is very true. That is very true indeed. Mike, thank you. Peter Cecchini, want to bring him in the conversation. We mentioned Guy Labat a little bit earlier on the programme this morning with Tom Keane on Bloomberg Surveillance, and some of his comments from Jenny Montgomery Scott that I mentioned on this show too I want to bring to you. There just isn't a good historical analogue for today's core CPI.
So yeah, I mean, we covered a lot of different types of commodities yesterday. We covered like oranges, we covered coffee, we covered sugar and banana prices, milk. We covered gasoline, energy, electricity. We covered a lot of different things. So yesterday's video was a lot of fun. But basically the findings was that, a lot of things have gone volatile over the years. Over the last 20 years, we looked at that data. Some things are seasonal, like oranges, cocoa, coffee, like those things are very seasonal. Like their prices spike at some times during the year and then it comes back down. Gasoline has also been volatile. It kind of ranged bound for the last 20 years. Milk, eggs, it's the same thing. But again, the real question always has to be like whether we're going to see a more consistent push higher or we're going to see more transitory, like it's going to come back down. So, all right, there's inflation. A few months back, I was paying $25 for mowing my lawn, and today they're not coming even with $45. So I bought my own battery one and started mowing myself. That's interesting. There's a lot of stories that I've heard, like individually, people have experienced that, a lot. So the technicals may hold up and we may see the dust settling. That's good to know. And yeah, technicals, again, they always don't trade in a vacuum, meaning that if I kind of label out a support or resistance level, they're not going to always respect those support resistance levels. Eventually, one or the other is going to break out in either direction with an external catalyst, with some macro, with some company-related news. So they're not going to always trade in a vacuum, meaning that they're not going to be technical oriented, and there is going to be some external factors that are going to drive the price to break out or break down certain levels. So inflation, one Fazer says inflation is about to be doubling. What they reported yesterday, June is going to be a scary too for the markets. Yeah, so it's really over the next month, and June again. So June numbers reported for the month of May are going to be another sharp increase. So we need to be prepared for that, and the markets need to be prepared for that because this is expected, right? Yesterday's numbers, I want to say it was expected, but it kind of caught us off guard with the increase that we saw. So, you know, there's a few different things. One thing is that you're expecting inflation not go up, and then it goes up. And second thing is your inflation for it to go up, but it goes up much higher than what you thought. And the third thing is you're expecting inflation to go down, and it goes up. The fourth thing is you're expecting inflation to go down, and it goes down more than what you were expecting. So there's 4 different misses and beats, so to speak, that you can expect. And yesterday's was kind of like on the far end of the cycle, where it's like inflation's going up, which is already bad, and it's going up, but more than what you expected. So, all right, Arun, thank you so much. I really love that. Appreciate that. My name's Katty, K-A-T-T-Y. That's how you spell it. Does inflation in the US also affect India? That's a great question, Antonio. It doesn't really. I mean, it has some correlation indirectly, but it doesn't directly affect inflation here in India. It does affect the import-export stuff, but prices here, what I'm paying for gas, are not going to be so much affected by prices what you're paying in the US, because again, it just depends on how much we're importing, again, the demand supply over here. But inflation historically in India has been very, very high compared with that of the United States in general. And interest rates also here are very, very high as well compared to that of the United States. But yeah, so the Nasdaq is up over 78 basis points now. The SPY is up over 34, so we're seeing that push higher in the greens. So let's take a look at some of the individual stock. Tesla up over 2% now, almost back over 601. NIO's up over 1.4. Mara making a strong recovery here. Is Bitcoin pushing higher? Let's take a look. So, all right, let's take a look here. Bitcoin is up over almost 50,150, up over 1%. And then Apple is up over 76 basis points. Let's take a look at Palantir, up over 2%. Let's take a look at Baba, down almost 3% here. So kind of flattening out, stabilizing around that $210 level. Let's look at some other stocks. DraftKings up over 2.87%, up over almost at $43. Treva, that's a great question. Christopher, so I'm going to answer both those questions. So why did you decide to move back to India, and are you staying here? So I am staying here temporarily right now, and just moved back because there were some issues with the immigration stuff. But that's, yeah, so I just decided to move back in February of this month. I was living in Boston for a while, but right now I'm just here. And I can't really travel because of the pandemic, so been under lockdowns for quite some time. Bella, I don't drive a Tesla. I don't even drive right now because I'm just home. Because the situations here are pretty bad. Antonio, thank you so much. I really appreciate that. Another bull trap today, most likely. Siddharth says, yeah, I mean that's a reasonable observation here for the markets, because again, I feel like after lunch is what we're gonna see really if the prices continue to kind of roll over, if we see some type of recovery. But I'd be cautious in this market right now, just yet, because you know with the inflation numbers and the unexpected interest rate speculation that's going to happen in the future, be a little bit more cautious, especially with the S&P and S&P and the Dow Jones, because they've been running really, really hot over the last few weeks, just been hitting new all-time highs. All right, so banking stocks a little bit down here, and so is energy. ExxonMobil's down, Chevron's down after being up yesterday. Coinbase, what do you guys think about Coinbase? 250 was kind of like the bottom here after the IPO price of 381. Yeah, 381 was the IPO price. It traded all the way to highs of 429 before selling all the way down to 250. Thank you so much. I really, really appreciate that. Nicholas, welcome. Thank you. So yeah, what do you guys think about Coinbase? Love to know what you guys think here. 283, is it a buy? Uh, 473,000 unemployment claims. That's good or bad? That's good for the markets. That's reasonably good. It's not great, but it's good as long as it's coming down a week over week. So coin has been struggling. Siddharth says to sell. Coin is a buy. Coinbase too expensive. Disappointed. I would not own coin. Yeah, I mean, I just need to really understand what their other businesses look like, because with transaction revenue and transaction fees strictly focused on one or two of the bigger cryptocurrencies on the platform, if the volatility for them kind of pulls back and if there's not enough trading activity for those cryptocurrencies, I think they also had some type of a news where a pretty big institutional fund basically pulled out close to, I want to say, like hundreds of millions of dollars worth of Bitcoin out of their platform. But nonetheless, this right here is going to be an article that came out yesterday, I believe. So Compass Point initiates coverage on Coinbase Global with neutral rating, announces price target 325. Kathy Wood also purchased a lot of stock, a lot of shares in Coinbase, I believe. So she actually bought a lot of shares of Palantir. What do you guys think about that? She, I think, piled in on Palantir's, adding $39 million worth of shares on the third day in a row as it's continued to sell off. So these right here are going to be ARK Invest buys on Wednesday. So, all right, we got Skills, ticker symbol SKLZ. We've got Unity Software. She bought Unity Software there. That's interesting. She bought Zillow, Twilio, Zoom Video Communications, also bought DraftKings, Roku, and then we've got, all right, so where do we have Palantir here? All right, so it just says $39 million worth of Palantir Technologies, and now together held 25.23 million shares, worth about $510 million ahead of Wednesday's trade. It's just that every time she's making those purchases, she's having to sell some of those other big tech companies, which is what I kind of have mixed feelings about, because she sold like over 87,000 shares of Apple to make room for some of her higher conviction picks, and again, she's using those companies as like cash money market accounts because Amazon, Apple, Microsoft, Google, they're not in that hyper growth sort of segment as to what she believes to be like for Roku and DraftKings and Tesla, Square also as well. All right, so we got 11 minutes for the markets to open. Let's see what the futures look like, and
of course that's our base case thesis.
Where's the conversation on capital gains now, Henrietta?
The capital gains conversation, I think, is dispersed in so many different ways that I don't see a path forward for a real material uptick or any at all in the cap gains rate. You have a defection of 13 Democrats in the House, which is 10 more than you need to sink that package on specific items like how it would potentially impact farms and family-owned operations. And that's enough to derail the broader conversation around cap gains. I think what the president has done is rolled out a proposal that generates a tremendous amount of revenue. But again, that's for a bill that won't pass. We don't need $2.5 trillion for the American Families Plan because the American Families Plan itself will not pass. So you're proposing offsets for bills that aren't going to become law anyway.
Pete, I raise this question because tech stocks, some big names have been hammered over the last couple of months. I'm thinking of Apple, which is down about 14% from the January highs. More recently, over the last 3 days, Alphabet struggled after a big year to date so far. Pete, do you think an element of that was the capital gains story?
I think an element of it was capital gains, but I actually think the fears of inflation and their ultimate impact on long yields were a bigger part of that story. We have seen some short duration correlation between investor sentiment relative to inflation and hence long dated yields and tech stocks, because as you often point out on this program, tech stocks tend to be longer duration. And what that's really code for is they're not making a lot of them anyway, not necessarily Apple, but a lot of them are not making any money now. Which means that their valuation is dependent on some terminal value, which is very sensitive to discount rate, and discount rate is in turn sensitive, obviously, to the benchmark. So I think that has more to do with it than capital gains, and relative to everything else that Henrietta said, it makes an awful lot of sense to me. But what it also leads to is the conclusion that deficit spending is going to continue to rise, and that in and of itself may have impacts on longer dated yields depending on what the Fed's reaction function to it is.
So, Pete, just to respond to that and to wrap this conversation up, you've become less constructive on the cyclicals, on energy. Why?
Well, it's interesting. I liked them for a while, as you know.
Yeah.
I'm still pretty constructive on commodities themselves. But as I said a little bit earlier in the show, early on, the commodity cyclical companies will tend to do a little bit better. But then as inflation starts to bleed through to the broader economy and it has an impact on demand through the elasticity, their profits could actually suffer. So I like the cyclical companies themselves a lot less than I actually like the commodities, which I think will continue to rally.
Peter Cecchini of Exonic, thank you, sir. And Henrietta Trace. Henrietta, great to catch up with you again. Coming up, the morning calls, and later, McDonald's raising wages
stuff there.
to retain workers in a tightening labour
again,
market.
so, we just heard, from cyclical's value plays, they're valuing them a little bit less now. They're becoming less attractive, so to speak, is what they mentioned. And tech is down so much. Again, they're longer durated asset classes, and just because of the interest rate, as we've talked about it on the channel, when you're building a DCF model, you're kind of discounting all the future cash flows. You're using that risk-free rate, right? The treasury yields, whatever they pay you, is a risk-free rate, is what you're using for the weighted average cost of capital to bring those cash flows back into present value. And if that rate goes up, then of course the terminal value that you're bringing back is going to be much, much lower. So that's what's causing the valuation repricing there for tech stocks. So nothing new there, but again, from a valuation standpoint, for cyclicals and values and inflation, that could dampen some of the margins, profit margins for some of those cyclical companies and value companies. And if that actually happens, of course, I strongly still believe the money is still going to flow back into tech and growth. It's just going to take some time. You have to be patient, but this is also a time where if you have a high conviction in those names, you have to be accumulating more and more shares, right? So if you have a high conviction in Tesla or Apple or Amazon or NEO for that matter, Shopify, Square, PayPal, some of those growth companies that are growing revenues, 30, 40, 50%, in some cases even as high as 80 to 100%, like we've seen with NEO, then now is the time to basically be accumulating more because they're not getting love, they're just not getting the appreciation to the underlying business or the. Wait, hold on. Oh my God, really? Oh, there we go. Were you guys able to hear me and Bloomberg as well? So was there music coming off? Okay, so I wasn't even paying attention to live chat. All right, there we go. But again, did you guys hear anything I said? I don't know what song is that, but did you guys hear anything I said? Can you guys hear me now? You should be able to hear me now, right? Yeah. All right, good. All right, perfect. Great. Yeah, so the market's open in about 5 minutes here, and put music off. You can hear you. All right, can you guys hear me now or no? Low key, keep the music. Yeah, I'll have to just go and listen to it post. But what I was saying was just in tech and growth, now is the time to basically be accumulating more shares if you have a high conviction in some of those names, even though they're not getting as much love right now. All right, we could hear, but not just as much. It was just vibing to the music. That's great. All right, so we got 5 minutes to the open. Let's take a look at SPY and QQQs here. SPY, QQ almost, Nasdaq up almost 1%, so that's good. We don't want to see any rollovers here. And all right, and then the SPY is up over 40 basis points. Shop is killing it pre-market. Let's take a look. So Shopify is going to be down bottom here, up over 1.85%. So Amazon's target raised at Citigroup on Outlook. So ample services growth potential for Amazon. So that right there is going to be a buy rating. Target is 41.75 is what I'm seeing on Bloomberg. And they'll also be hiring 75,000 logistics workers in the latest hiring binge. So that's a lot of people, right? That's a lot of hiring people that they are going to be doing for Amazon and a re-rating and a reprice target of close to 41.75. That's kind of aligned with my price target, but if you take a little bit more of a bullish stance, the target gets to as high as $5,000. But for Amazon, 4,000 is a very conservative estimate. Advertising and services, 2 growth sectors I see for Amazon. Do you think NIO will go into the 20s? It would happen only if the Nasdaq continues to sell off. So like yesterday, NIO did pull back. So yesterday you'll notice a very similar pattern, right? So NIO did pull back. It was down close to 3.4%, but it didn't get to as low as the day before on Wednesday, right? The low for Wednesday was 32.20, and the low for yesterday was 33.48. So we didn't get to quite those lows, even though the Nasdaq, like I said earlier, was pushing down even further. So again, the correlation is stabilizing. Only if the Nasdaq continues to be very, very weak, and we see a further breakdown for the Nasdaq is the time when I see like NIO and a lot of those other companies kind of take a hit a little bit longer. All right, 4 stocks we're going to put up on the screen. 4 stocks. Which stocks are they going to be? Tesla, NIO, Apple. What do you guys want? All right, so you guys can hear me, and the music was a nice backdrop. All right, so that's good. Hopefully that music was not like licensed or anything, so I don't want to get demonetized for that. All right, Spotify. TQQQ is a great one. Spotify's up over 1.29% here, pre-market. Tech recovers today. That'd be great. Let's put AMD. That's a good one. So AMD, we're gonna put. So we're seeing a little bit of a pullback here for advanced micro devices. Apple will put at the bottom right, and then we'll also put Tesla over here, bottom left. Right, so we're up over 2% now. It's trading as high as $602. 2 minutes, yes, 1.5 minutes until the market opens. So Dogecoin now under 50,000, so trading as low as 49,800, and actually Bitcoin 49,800, excuse me, and Dogecoin's just over 41 cents. And then we got the yields that are USNY down about 1.3%, trading as low as 1.68, and the VIX is also down over 8%, trading under 26 levels. I'm gonna switch because I'm getting a lot of NIOs, so I'll switch Spotify for NIO here. All right, so NIO up over 86 here before the market opens, and we've got about 30 seconds. So the bond market, treasury is what's affecting the growth stocks. Expect more weakness until the end of the month, maybe. Yeah, it really. I see more visibility and clarity now in terms of inflation. It was a little bit higher than expected, but if the yields continue to push up higher over 1.75, that's what's going to drive a lot of quantitative tightening potentially in the future. So you're right. I mean, I could see a little bit longer. All right, so the market's open. Let's go. Let's take a look at it here. So NIO's down, just about flat on the day. AMD also seeing a little bit of a pullback here at the open. Tesla 1.8. So Nasdaq really pushing higher, up over 1% here.
Apple, Tesla, Alphabet, Amazon. These are companies that put up great quarters but have come under tremendous pressure recently around inflation fears. Today, it seems that these same traders are digesting the high PPI and accepting the CPI. Turning to yesterday's only up sector, energy up fractionally yesterday. Today, not so much. You have the big energy names down in sympathy with oil dropping as the Colonial Pipeline has restarted. Plus, inflation concerns, China in particular, warning about rising commodity prices. They are, of course, the world's largest user of natural resources, so a stark warning. And then finally, we've been talking this morning about Amazon and McDonald's, the big companies' hiring plans. Amazon, of course, hiring 70,000 people, average pay of more than $17 per hour. McDonald's hiring more than 10,000 new workers over the next 3 months, with average pay up more than 10%. Both of those stocks are higher. Amazon to a far higher degree, though, John, getting that big tech bounce.
Abby, thank you. Here's the quote from McDonald's. I'll read it. Quote, "We face a challenging hiring environment, and staying ahead means we must constantly renew our commitment to offer one of the leading employment packages in the industry." Mike McKee's been on top of this over the last couple of hours. Mike, your reaction?
So yeah, we're getting a little bit of bounce higher. Energy is actually down today, is what they mentioned. So if you come over to our energy watch list, down about 2% for Brent and crude, and Exxon, Chevron as well. So I really think that we're gonna see kind of like this back and forth market for some time, because right now there's no clear winner. I mean, energy and financials are clear winners year to date, but on a day-to-day basis, we're kind of seeing back and forth, a lot of back and forth between the Dow Jones, the S&P, the Nasdaq. And right now, as it stands, we got the Nasdaq up over 1.2%, where the S&P is only up 70 basis points, and the Dow Jones is up over 40 basis points, right? So again, huge divergence there. But historically, like last few days to a few weeks, and even in the month of February and March, we saw the Dow Jones and the S&P handsomely outperform the Nasdaq. So it just kind of goes back and forth, and I wouldn't be surprised if that continues for some time, right? So again, June numbers, keep a close eye on those. Mohammed says, bull trap, don't be fooled. Thanks for the warning. So AMD is up over 72 here. NEO's pulling back a little bit, up only 0.5%. Apple's on the move, up over 2%, back over 125. Amazon is also pushing higher here, up over 1.2%. And this right here is going to be the Nasdaq and the S&P. So we're seeing a little bit of a push higher. Yeah, so it should be muted. Remember to mute it. So tomorrow, keep a close eye on retail sales. We got the business inventory numbers also coming out. So those are two reports that are going to be important on the calendar. It's usually the first and the second week that are the most important on the month, and then of course the earnings were also like on yesterday, like last week and the prior week. We had the financials, banks, and tech, and so there was some increased volatility in general, right? So moving forward, like for the VIX, $30 levels is about as high as I could personally see the VIX going, right? Tesla at 604, that's great. Well, 600 right now. High for the day was $604, but we're seeing a little bit of a pullback here. So all right, so let's take a look at this market here. Vroom's up over 7%. We've got GME's up over 4%. Let's go DraftKings, almost 4% on the day. So Virgin Galactic bouncing off the lows. I think it was down over 14% on one day after the earnings, but it's up over 3% today. Just a little bit under 1675. We've got Unity Software seeing a little bit of a bounce higher, 2.5%. It's just been on a sell-off here, Unity Software too, and so is Enphase Energy, right? It was trading as low as $108 per share. Massive discount for Enphase Energy. Etsy is bouncing off the lows, it's up over 2.36% here. Southwest is perhaps one of those reopening trades, and so is Carnival Cruise Lines. Are both pushing higher, up over 2% each. But yeah, tech pushing higher, and the only sectors that are down, Alibaba on earnings down about 2%, and then we've got Chevron, Exxon. We've got, that's about it. Coinbase is another outlier there in that sector. All right, everyone. Thank you so much for joining in. I really got to run here, but thank you so much for being around for some time. Again, we covered the CPI, we covered the PPI. I'll put a separate video out on the producer price index and the jobless claims numbers, and what the macro situation looks like moving forward. As always, if you enjoyed this live stream, make sure that you drop a like. We're just at about 100 likes here. So let's see if we can get to at least 200 likes before you guys sign off. And again, don't forget, if you guys want to get access to a lot of different things, so Webull, the link is going to be down in the description below. 2 free stocks worth up to $1,850. Patreon link also going to be down in the description below. And this right here is going to be our TradingView charts. Absolutely free. If you want to sign up, the link is also going to be down in the description below. So thank you so much for joining in. Again, we'll do this once again on Monday over the weekend. We have our private live stream with the Patreon members if you want to be a part of that. Again, the link is going to be down in the description below. We cover 15, maybe 20, sometimes even 30 stocks on a technical basis. We go over the support resistance levels, talk a little bit about the macros and the earnings expectations next week as well. So thank you so much. I hope you guys have a fantastic day, fantastic evening, wherever you guys are watching from. Shout out to all of you guys. Thank you so much. I really, really appreciate each and every one of you guys. And thanks for the support throughout the market madness that we're seeing. So again, I hope you guys have a green day, and I'll see you guys in the next video.